candlesticks. Let's discuss candlesticks. Now, the basics and the most important thing to understand about candlesticks is we have the body, right? And then we have the wicks, right? Yes, some candlesticks do not have wicks, but most of them have wicks. And these wicks can be a great advantage to us if used properly. So we need to understand that we have bearish candlesticks and we have bullish candlesticks. Bearish candlesticks show us the down movement. Bullish candlesticks show us the up movement. All right. So this body on its own has a resistance and a support. All right. This becomes the resistance, right? And then this becomes the support. All right. Now, this means that whatever next candlestick is being printed, for price to continue going lower, it needs to close below the low of our body. All right. Now, if price closes below that low, that tells us that price has more chances of pushing lower. If price was to close above the resistance, that tells us that price might not have that much bearish pressure as we were being shown or as we thought. All right. Now, this applies to the wicks as well. All right. So no matter whatever is happening in between this area, if price wanted to go lower, right, no matter whatever is happening in this area, if price wanted to go lower, it would have to close below the low wick, right? The lower wick. It has to close below our wick range. If price was to close in our wick range, yeah, sure, that's fine. Price can close in our wick range, but we can't really expect price to keep pushing it because it hasn't closed below that wick range. So price, yes, has bearish pressure, but for confirmation, it will close below the wick range. All right. So that means we would need price to close below that wick range, telling us that price is pushing lower. All right. Now, this same exact thing applies to bullish candlesticks. All right. You have the same thing. You have the lower body, that's the support. You have your resistance. All right. You have there resistance. You have your support. All right. So for price to keep pushing higher, what do we need? We need the candlestick to close bullish. All right. So we would need this candlestick to close bullish. If price was to close bearish and it closes below this support, this body support, then price is telling us that it might not have as much bullish pressure as we thought. So that means you wait. This is all about waiting. All right. Patience will be your greatest advantage because sometimes when you wait, you just wait just enough, you can grab those good entries that we all want. All right. Same thing applies to the wicks. All right. We have this upper wick range right here. About what needs to happen above that upper wick range, we need price to close just above. All right. That tells us that price is pushing higher. All right. That tells us that price is actually pushing higher as we should need price to close a buyer, to push higher, to keep breaking those highs. All right. That's the one big secret about trading. You need price to keep breaking those highs, those small highs. The more it breaks, the more it goes higher. All right. The same thing with the bearish side. The more it breaks those lower ranges, those lower supports, it keeps creating new lows. The more it's going to keep on pushing it. That's profit for you. All right. Now, do we have any questions?